everybody! Today I'm going to use some math to explain why real estate is such a good investment for so many people. And also, what are the potential downsides? Now, you might ask yourself, why real estate? Why do so many wealthy, successful people use real estate as a way to increase their wealth? Well, it has a very good potential for debt financing, it has the potential for good cash flow, also it has high risk but high reward. First of all, let's look at debt financing. The bank is very eager to lend out money for you to use to buy properties. They almost compete for it, whether it's for private persons or for companies. And what happens when you use debt in the financing to buy real estate? Well, let's use some math to explain. Here we can use the DuPont formula. So let's say you want to buy a property and you put 10% down as your own. We call that equity. You have 10% equity in the property. And then you go to the bank and guess the 90% that's left to buy the property. You have a debt financing of 90%. Now let's say that the return on investment on this property, renting it out, value increase, all this, it summarizes to 15% for a year. And let's say that the interest rate on debt that you get from the bank is 5%. Now, this is of course just average return. It can be lower or higher. What happened to return on equity, the total, when you have this kind of structure in the financing? First of all, on this equity part, you don't have any expenses on that. You're going to get 15% on the money you invested. So let's say you have $10 down, you're going to get $1.5 back in the end of the year. But you also have a debt part. The interest on the debt was 5%. The return on the investment was 15%. 15 minus 5, once you paid off the debt, you have 10% left on that, with no money down. This is pure profit. This is pure leverage for you as an investor. Take that times 9, because you were heavily leveraged on the property. That's a $9 return. What happens here is that you get, on the money that you yourself put down, you get more than 100% return. This is the power of debt. Potential for good cash flow. We know in big cities it's easy to rent out. It's hard to find a good person to rent out to. But you have the value of the equity, the property going up, and you have the potential to rent it out. It's a very good potential for cash flow that comes in month after month after month. Now, some people might say, oh, why not just invest in the stock market? It's fine. It's a more passive form of investment. It doesn't require a lot of management, but you don't see the same returns here. And if you go to your bank and you say, can you lend me some money to invest in stock, so get leverage? It's not as easy to get a good deal. Also, we come into high risk, high reward. This is very risky. What happens if the property market plummets, like it did in 2008? Then this same leverage structure is true, but it goes the other way around, and you can lose a lot of money. And this is the downside of property investment. There's a lot of risk. But remember this, if you don't take risk, you're never going to get wealthy. In order to make a lot of money, you need to take on a certain amount of risk. This has been an explanation on why investing in real estate. I hope it helped some of you out there. Thank you for listening.